You're running full speed, but the markets are faster. Quasar Markets Live brings the world's top financial minds to you. Everything you need to know in one place. Learn from elite educators and gain a competitive edge, leveling the playing field for you. Join the conversation. Quasar Markets Live.
Good morning, Quasar Markets Live. Hope everyone's having a good start to your day. PCE data is just coming in. Sorry, trying to get a feel here for what happened, what they're saying. Looks pretty good from the first things I am seeing. So we'll take a look here. And more importantly, how are the markets reacting to it so far? Let's see here. Where is the levels? Do I have any numbers here yet? No real. Oh, there they are. Month over month, it looks like 3 versus 3. January PCE year over year, 2.8 versus 2.9. So a little bit better. So sort of nothing to really raise an eyebrow to, it looks like so far. But we will, keep an eye here as more data. There's a big, pretty big economic calendar in general here. I actually should just use this to do that anyways. And what you see here is PCE, excuse me, core PCE came in 0.4, forecast was 0.4, prior was 0.44. Core PC year over year, 3.1, the forecast 3.1, prior 3. So not too far out of line for anything. We also have GDP growth rate coming in here. That's pretty dismal. 0.7 is now the actual. The forecast was for 1.4, and prior was 4.4. So GDP, that's anemic at best. So I'll definitely be talking. I do have Mr. Flanagan coming on at 9 o'clock here. I will keep an eye on that. We do at 10 o'clock have JOLTS job openings coming out. Michigan 5-year inflation or consumer expectations, Michigan consumer sentiment, and then one of BigBeat's favorites, the Baker Hughes rig count. That will come out, which is going to be an interesting one to look at today because, again, what does that tell you? That is a gauge that tells us how many actual oil rigs are actually working in West Texas. So we'll find out whether or not there has been an increase. Is this, prices leading American or U.S. companies and U.S. drillers to open up more wells? That's what we'll be looking to find out. So that's a good one to keep an eye on today that I probably don't look at as much on a normal day. Let's take a look at what is happening across the market so far, looking at the NASDAQ through the lens of the triple Qs. We are up about 44 basis points here. So not really a big move, back about half of yesterday's loss, not quite, about a third of yesterday's losses, getting recovered so far. So nice little move to the upside. Question is, do we see a continuation through? The key spot to watch here is anything that approaches that 602, 603 area, which was the high from yesterday. Can we get back through that? That would be the first step to a better multi-day recovery. The S&P's up about 41 basis points also, again, about a third of what it lost yesterday. And this one, definitely below the linear regression bottom and everything. So we'll be interested to see again. And the key level to watch will be that 671 area here, yesterday's highs. And the Dow Jones was down 1.5% yesterday also, again, up 42 basis points. So all three indices you can see, and we're going to get into this as we start to look at the different sectors of the S&P. This morning, what we're seeing is the reversal. Yesterday, it was a broad market, sort of beat down. And, if we look, advanced decline closed down about 5,652. So there was, 5,000 more stocks that finished in the red than the green. That's a pretty big number. So expecting to see a little reversal of that today would not be a surprise. So that's what I'm sort of expecting here. The question is, what happens with tweet analysis? We already have Defense Secretary Hegseth and General Kane are holding a briefing on the U.S. and Iran war. What comes of that would be step number one. Oil prices have been our focus. The good news there is they are cooling off a little bit this morning. But again, they're cooling off of rather elevated numbers. Unless I see a lower low today, which means getting below 87, then it's just consolidation, right? It's not really a pullback until we can, in my opinion, until we break yesterday's, low and stop the trend of higher highs and higher lows. Because as of now, we've set a trend even here of a higher high and a higher low, even though it's on the wick. That setup is still there. It means oil, energy is going to be a focus today still. When we look at the sectors of the S&P, at least earlier, it was the one. Yeah, with the biggest two-day gain, it's there, and utilities are right about the same level. But that's definitely the case there, that oil is, while it's down, again, it's sort of like yesterday where I mentioned that, numbers didn't necessarily hit or didn't really display what the market was showing. And yesterday, that led to a further fall throughout most of the day. Today, what I would say is, while oil is pulling back, which has given the market some room to run, is it actually going to pull back, or is it just consolidating here before more bad news to move to the upside? That's the question we'll have. It's going to be a lot about energy. The news is, when can we get the straits opened? They asked Secretary of Energy, right? He said the U.S. Navy is not ready yet to escort tankers through the strait, but it will happen relatively soon. Treasury Secretary Bessent said that as soon as it's military possible, perhaps with an international coalition. So again, they're sort of changing the tune there a little bit also. And if oil starts to rally again, it has absolutely put pressure on everything else. So that is still, again, I normally start with volatility index. Right now, I'm starting with oil and gas. Volatility index we go to next. It is sitting down about 5% versus yesterday. And the good news here is, in reference, it actually has been moving down since the close. So, yesterday afternoon, we got up, we spiked up a little bit again this morning, but then we have actually fallen below yesterday's close. So again, not what we were seeing in the market yesterday. Today, we are seeing the VIX actually below the close of yesterday as we start off the day. So that's good to see. Maybe we can start to see that volatility, change. Rates are a little bit of both. So the 10-year has moved down on the PCE news a little bit. So it's now down about 40 basis points, which normally would lead to good news for risk, but the 30-year is still slightly up, not getting affected by that PCE data as much. The dollar, King dollar, definitely back above 100, got as high as 100.3 earlier, pulling back again since that PCE data came out. But we're starting to get elevated levels here on the dollar. Like I mentioned, we have Steve Flanagan coming in at 9 o'clock to break down everything across the currency markets. Gold's just been consolidating sideways, 5,100, 5,150, 5,200, 5050. Those are sort of the numbers we've been calling out going back to last Wednesday or so. Same thing, silver pretty mellow too, and this 83, 84 level, not much to see there. Crypto, something to see there. Bitcoin finally broke through that 71 area that we hadn't been able to get through here at about 71,800. Broke through it here earlier this morning and have continued to rise to the upside. We are hitting some key resistance here. We do have room, it looks like, on the liquidation heat map to push us up towards that, 73,500, 7,400, if we can get some positive action here on the cash open. ETF flows were good, and my bigger takeaway there, I mentioned it yesterday morning, what we're seeing is a little bit of a flow change. And what I mean there is there was a bigger increase percentage-wise into the Ethereum and Solana ETFs than into the Bitcoin ETFs. So we're seeing a little bit of rotation. It looks like, the first signs were, the positivity for the last 2 weeks or so across the Bitcoin ETF. And we hadn't seen that across the others. Now we're starting to see this. Is that going to break its head above? That would be positive. We have also seen that FOMO is kicking in on each of these runs above 70. So there is, we are seeing people interested in trading it, running to the volatility. So that is good news. But with that being said, almost all of this run over the last 12, 14 hours has been short squeeze led. It's been a lot of liquidations. It's in that perps. What we need to see is now at this 72,350 level, do we get spot buyers into the spot market? I'll really be watching to see what flows look like this morning. That will be a big tell for us. But again, under the surface, some positive stuff. But the question is it just like what we saw back here in early March? Do we make the run to 74 and then we retraced all the way back to below 66K? Or do we have the room or the legs to make the run? 78K would be the next level above that you're sort of looking at as a key spot. So again, crypto looking pretty good. If that's going to be the forbearer into risk on today, that's a solid thing to look at. Overseas markets were pretty weak overall. It does look like the stocks is starting to move into the positive level. They had been negative. So they do look like they're going to finish on the positive side. Again, maybe that leads well towards us. Asian markets were weak in the early trading there. Sectors of the S&P, all of them are in the green right now. Like I said, it is the opposite of yesterday where we had a broad market sell-off. It does say that we are now looking at, a broad market move to the upside. So that's good to see. Second day, maybe continuation here, our energy and utilities. Again, that would be bad for the market. If we see energy and utilities are driving the bus today, it means we'll probably see a pullback across a lot of the other sectors, right? But right now, technology is the leading sector. So that's, again, when we gauge risk on, risk off, some of the biggest gauges we use today, VIX moving down in a steady, action, rates being sort of standoffish, decent news catalyst. Things are lining up that we could do it. The kink in the armor is definitely the fourth quarter GDP. Economic growth was much slower than expected in the final 3 months of 2025. And while core inflation rose to start 2026, that actually stayed in line. The gross domestic product, and that is the measure of all the goods and services produced across the U.S., rose at a seasonally and inflation-adjusted annual rate of just 0.7% in the fourth quarter, according to the BLS. The first revision of the GDP reading was a sharp step down from the previous estimate of 1.4% and below Wall Street's estimates. Also, huge markdown too versus the last quarter where we saw 4.4% gain. For the full year, the GDP posted a 2.1% increase, or 0.1% lower than the previous reading. In 2024, the economy rose at a 2.8% rate. So when Mr. Flanagan comes in, I will ask him how he feels about these GDP numbers, you know, and what they tell for us versus the rest of the globe. All the bigger news, you know, in my world is the hopes of interest rate cuts have really gone down. And I don't know if you saw, I think we went over it. I don't know if we went over in here yesterday, but, you know, they're not even looking there. There's the first sort of month that you sort of see them saying that there might be an increase is now December. So we are looking more and more like, you know, like I'm stuck with my mortgage rate. What else are we looking at? Let's take a look at the mega caps. Mag 7, Nvidia now up about 1.23% here at 185.43. You know, this was looking strong going into yesterday when we were here. If it can break above that 187.70 mark, I would look for a run back towards the 190 level. So if we do see continued strength, if semis and tech seem to drive the bus today because of, you know, news and economic data that's coming out, then that's what we'll look for. On the downside, any kind of break below 184 really opens the door back down to that 181 low we saw yesterday. So that's the range you're sort of looking at there. Apple's up about 35 basis points. Not seeing the love the others are so far, and still really down on its, you know, down towards the lows on its daily chart. Google, a little bit of a bounce back here, about 1.15%. So similar to Nvidia's reaction there. And on the hourly chart, you can see a nice little W formation, double bottom, whatever you want to say, sort of breakout setup. If it gets above 307.44, you're really looking for a run back to that 310, 311 level. So do have a little bit of a breakout setup in Google, it looks like. Microsoft, not much movement, pretty flat here. Did think it was interesting to hear Becky Quick from CNBC going back and forth with the CEO of SentinelOne, who sort of was dumping on Microsoft and the fact that they're building security features directly into their products. Definitely worth a watch if you didn't see it. Amazon, similar here, double bottom setup, not as bullish as what we saw with Microsoft, where we had that sort of upward facing or right tilt to the W here. Here you sort of got that exact W set up. And those are positive also. So again, we've got some decent looks on the charts, but you know, the problem with the charts is one tweet changes that really quickly, doesn't it? So that's what we would have to keep an eye on here. Good morning, Zora. Hope you are having a good start to your day. And Tesla up about 1.16%. I was reading an article about the new robotaxi cars. This is a really big bet that Mr. Musk is making, rolling out these cars with no side mirrors, no steering wheel, and no pedals, which goes against all of our sort of rules that are in place in the Highway Commission. So he's really counting on being able to get them to give him an exemption for those or to change the rules. The key to it, and I see the payoff is if it does get approved, he's able to make these cars like 4 times faster than the other cars, than the regular Teslas. And with that, they can really get a market share in that ride sharing, taxi cab hailing, auto driving world. So fascinating stuff. If you haven't, again, take a look. I think it was the Wall Street Journal had a couple of articles that were really good on it lately. Okay, let's take a look and see about what is moving the most so far today, or what ones we need to talk about first. Adobe, ADBE earnings were last night after the bell. They did have better than expected earnings, but it hasn't translated into the stock price down almost 10%. The news was definitely, or the numbers were definitely eclipsed by the resignation of their CEO. It surprised investors and Wall Street. He's been the CEO of Adobe for 18 years. He will remain in the role until his successor is named. That is, by the way, Shantanu Narayan. He will also stay on as the chair of the board to help support the new chief executive. So there is a lot of news there, a little bit different, huh? Yeah, you know that tweet analysis there, Zora. And Adobe, definitely has been hit pretty hard here, down for the year to date, 23%. Over the last year, down almost 40%. So they've been under pressure for a little bit. They, at one time, this is down over 50% from the highs of 2021 when it traded almost 690. The concern is that AI capabilities can replace what the software does. Some investors worry that Adobe is particularly susceptible to the disruption as other companies launch creative software tools powered by AI. I know BigBeat has brought that up a few different times. He's not a big fan of this one. He said they've been doing some nice things, and they are trying to build the AI in. The question I think is that, does Adobe have the stickiness to keep paid users? And what I mean there is, I don't have any Adobe product that I use that I pay for. I've used and do use some of their freeware stuff that they have out there, but I don't pay for any of their stuff. Do they have the stickiness needed? We've talked about, not every software company is doomed, and some are. Is Adobe one that's going to make it through? I think their use case, is dwindling. I think the amount of people that use Adobe is still very large. I don't think I have any membership numbers or subscription numbers here. I don't. They're still making good money, and they'll still continue to make good money. But like I said, the question's more about, are they they to me seem one of the ones that could be displaced pretty easy. One of the companies I try not to learn too much about, but ask my wife about, Ulta Beauty, had their earnings overnight also down 12% here. The retailer has gave bad guidance. They cosmetic retailer forecast a profit in same-store sales for this year below Wall Street estimates, and that definitely has them really being hurt. They said that the consumer is being cautious, especially in relation to the war. So that's sort of the first company that sort of hit on that from a retail side. Company made its forecast after it spent last year trying to improve store displays while focusing more on expanding into wellness and refining its approach to online sales. My wife did mention that to me, that she had seen a move from them more into that wellness business, not just only beauty, but supplements and, drinks and things like that. They did say they expect their revenue gains to be about 6-7% on the year. And their CEO said that the pickier consumer sentiment seen last year would likely be more alive and even more prominent this year. So that has them moving to the downside so far. Other names to keep an eye on, I mentioned Sentinel One. Their CEO was on CNBC and got into a rather heated argument with Becky Quick because he was sort of bashing the competition, so to speak, and bashing Microsoft, and she couldn't get a good answer out of him as to why he felt that way. And the big sticking point was really more about the fact he said, just look, they have more problems than anybody else. And she pointed out that they're the largest enterprise software company. They have the most customers. So, of course, they also have the most, issues. It just goes along with it. And he did not have a very good answer to that. They did see about a 20% jump in their revenue, but they posted a loss. So, again, this is a company that is barely profitable. They have 271 million in top line revenue. That equated to about 7 cents a share in profit. But their fourth quarter and first quarter guidance underwhelmed the market. Other companies on the other side of that we talked a little bit about yesterday, let's see if they've got continued strength, has been Mosaic, up another 0.5 percentage point today. So, again, the fertilizer companies, like the oil companies, have been a beneficiary of what's going on. CF is the other one that's a play there. That one is actually down. It was up about 13% yesterday, pulling back slightly here today. So we'll continue there. Most of the other gainers that I've been watching today have been the crypto adjacent names. So MSTR up about 4%, as Bitcoin's running. We see Bitmine inversion up about 5%, Coinbase up 4.54%. That's also translating down into the Bitcoin mining companies, where we see, Mara up about 3.54%. The others about the same, 2 to 3% to the upside. So again, that is a sector definitely showing pre-market strength so far. What I haven't looked at is how financials are doing today. They have been under such pressure, as we talked about yesterday. They are making a little bit of a bounce back. So similar to tech, they've got about a third of their loss here on JP Morgan back. Bank of America, the same. Now the question is, how is that translating to the private credit part of the world? Owl, I hit the wrong one. Blue Owl bouncing back a little bit here. So maybe we've seen the bottom on that private credit crunch. Apollo is another one to take an eye at there. So, okay, so we're starting to see a little bit of a bounce back. So maybe the bottom is in. Maybe it might be time to dip your fingers into those private equity companies that have been really, really beaten down due to the, due to the private credit crunches. Sorry, just seeing what's cracking here. Not really much hitting anything here. Let's take a look at advanced decline and the tick as we head into the 9 o'clock hour. So again, broad market recovery so far today. Everything seems to be up about a third of yesterday's losses. So a good start to the day, but we got a lot of digging out to do if we're going to see ourselves end the week on a positive note. I do see Mr. Flanagan's in. We got a lot of economic data to discuss. So let's get him in here and talk about what's going on in the markets. Mr. Flanagan, how are you doing today?
Good morning, Howard. The dollar's safe haven status is reaffirmed.
Absolutely. King Dollar is definitely leading the way here today. I got to ask you, start with the bad news. GDP data just came out. You've called those numbers that came out today in regards to Europe as anemic at best. What's your response to it now as it comes here in our GDP data?
Yeah, no shocker, right? I mean, for almost half of the period of the fourth quarter, the government was closed. So, nobody was doing anything. Everybody was, is it going to end? When's it going to end? So, um, I would expect a fairly sharp bounce back, but no shocker. What it does indicate, though, take the number at face value, forget the storyline behind it, is that stagnation is beginning to grip the world's GDP. I mean, let's look around. Eurozone 2025. I mean, let's just look at 2025 numbers. 1.4%, Japan 1%, UK 1.3, Switzerland 0.7, Canada 1.2, and the United States probably comes in, around 2.5% for the end of the year. But what it is stagnation across the board. And next week is central bank super week.
Yeah, it's your Super Bowl, right?
That's right. Exactly. You've got everybody lined up. You've got the Fed on the 18th, ECB on the 19th, Bank of England 19th, RBA, Reserve Bank of Australia, kicks it all off on the 17th, Bank of Japan on the 19th, Swiss National Bank on the 19th. Whoa, could we see below 0% there? And Bank of Canada on the 18th. So, in a quick 3-day burst, the whole world could change. My big point is that the central banks have a hawkish addiction. They are engineering a stagnation throughout the world. Households are being squeezed, investment is dead, productivity is flatlining, except in the United States, and Europe and Asia are suffering a major brain drain. That's not stability, it's a managed decline. What are the central banks doing here?
Yeah, I don't know. I mean, it does seem like they're behind the times on everything, and they don't seem to prepare for, situations very well. I mean,
Yeah.
I thought I was so close to being able to redo my mortgage, and now they're saying no rates till December.
Look, lower rates would boost confidence. It would boost consumer spending and capex. One of the big things I worry about here is they are just addicted to this oil scenario and how it's going to be inflationary. So most likely, it's not a good forecast ahead. But if I use their scenario, again, I'm looking forward into next week, that this oil shock is, going to hurt the interest rate scenario. Well, let me just offer some proof that where were they when oil was below $60?
Yeah, when it was for a year. I mean, we stayed pegged at such low rates for a year. I'm with you there. Well, I brought up you were here Wednesday. I mean, I've been pointing to it all for the whole year, right? That's been one of our things. Keeping inflation down has been, the gas, and it's been a good thing for everything because it helps in so many different ways. Now, all of a sudden, that wasn't a benefit before, but now it's a negative. I'm with you there. I'll be watching. We get the rig count comes out of Texas. So I'll be interested to see, did we start to uncap some of those wells? Because that would be positive if we're going to start to increase. But our refineries can't do much more. We're in a tough place of, we'd love to sell more oil, and it should help us. Like the president did say, he's like, hey, good guy, it is good for us. Yes, except that our refineries are maxed out and we can't get to that next level. It's that, we'd love to increase production here. We really can't right now.
And the Fed is strangling the consumer, strangling us. And, I mean, they're looking at an absurdity of inflation. Show me where inflation is rampant in the world. Nowhere, not in Asia, certainly, and not in Europe. I mean, look at the numbers that came out.
Surprised. I was looking through those numbers. TradingView has a great little, map that does that. And I was actually surprised. Inflation actually has tempered down around the globe and in areas that you don't normally necessarily think it would. Brazil, 3.81%. Mexico, 4%. Outside of Argentina and Turkey, the G20, you get to Russia at 6%, but most of them around 2-3%, is actually pretty good from what I see.
Yeah, I mean, France announced their CPI today for February, and on a yearly basis, it's plus 1.1%.
Yeah, 0.9 right now, 0.9 on a yearly running.
Yeah, I thought we were shooting for 2.
Yeah. Oh, yeah. I'm with you. And you've got Italy at 1.6 and Germany at 1.9. So almost all of the G20 out of Europe, why are they not there? Again, you know what I mean? It just keeps getting more confusing because you said that. Not because you said it, because you pointed it out. You're right. If you look at the numbers, they don't match up to what they're saying. And the worry is, I think everybody's bigger worry more than inflation is jobs, right? Layoffs every day. Some of the biggest movers in the market every day have been companies that do what? Announce layoffs for no other reason of that cost savings. And it's showing people that AI is working in that company, or at least they hope. I hope that's the same there, but that's it. It's time to get these rates down. It's time so companies will hire. It's time so we see GDP growth pick up, like you're saying. It's time for this stuff to happen, right?
It is. I mean, look, UK GDP announced today for January, 0%. Industrial production, minus 0.1% in January. So these are real numbers that just coming out now. So where, are we in the face of declining growth? I throw the US in there now, although I can give you a good storyline to why it was so low, but everywhere else you're cratering with growth. So is that a time to be focused? You know what it is that the central banks are ill-equipped to handle shocks. We learned that.
That's what I said a little while ago. They're not set up they don't have anything set up for a black swan event, and they don't have anything set up for a runaway to the upside market either. They just they only want to be in a choppy market, and they don't know how to handle anything else.
That's it. And it's the sticker shock from 2020 and COVID. And then the inflation was transitory. And then the rapid run up in interest rates globally. They are sitting there so afraid to make a decision that they're driving the world into a stagnation. And this is something that, I just wrote about in my Twitter handle, S. Flanagan 1979 on X. It's a central bank hawkish addiction. And honestly, the one country that is breaking out of it, of course, the United States is clearly at the lead, although we're in this paralysis right now with the Fed. But the country that is beginning to break out is Japan.
Yeah.
So the populace is speaking. The prime minister won a massive super majority in this recent election last month. And I think that's telling us right there that the populace is now going, enough. No mas. I want growth, and we need jobs, and you guys got to start focusing on us, the populace. And that's what I think the voters will really whiplash Europe very shortly with any of the most elections that will be held in the short term, I believe, will begin to show that. And United States, watch out in the midterms. I mean, everybody is going polls. Look, polls don't work. They haven't worked in the last 2 elections. So forget about the polls, right? People are going to vote with their wallets. They're going to, in the old days, you closed the curtain and you voted with your wallet. And if the things are going good in November, everybody's going to vote for a continuation. If things aren't good economically and people are still hurting, they're all going to vote for change. Simple. That's your poll.
Yeah, no, you are correct there. There's no doubt there. Steve, let's get to the DXY 100.02 here. What are you looking at? Whoops, wrong one.
Sure. We hit a high of 140. And I think that was, the level we've talked about. I don't want to be long dollars at these levels anymore. However, the weekend risk in the geopolitics, anything that does happen, the dollar will spike further. You can see, if you look at the whole year, in a year where the narrative has been de-dollarization, the dollar lost its reserve status, well, guess what? One little event and that is all wiped out. The market is trading defensively. They are unwinding the hedging, the large short positions. I think a month ago, I highlighted the Bank of America survey that said dollar shorts were at a 14-year high. So it's no doubt that the dollar is moving. I think the next big level here that I want to watch is the November 25 high of 140. Today we hit 130. If we break 140, it's a moonshot to 102. And, I don't think you're going to see much of a retracement. Right now, I show good support at 98.30 to 50. Primarily, the euro dollar is leading this. And as expected, there is no growth in Europe. The central bank with Christine Lagarde is, holding to this firm hawkishness. Forecasts are for them to raise interest rates. Yeah, I don't understand, how we could even be discussing
we
that.
We just went through their inflation numbers.
I mean. So,
when is she out? She's out pretty soon too, right?
End of the year, yeah. So
she's got the whole year. Okay, so we get rid of Powell first, then her.
Yep, and
the evil we know is better than the evil we don't know. Sometimes
that's
and as a crypto guy who thought Gary Gensler was going to be good for it because he had taught a course on Bitcoin and cryptocurrency at Harvard. Man, did I miss that one, right?
From the FX days, had we talked, I would have said Gary Gensler is poison. He's the worst you could ever have there. FX, he, regulated, was going after the spot market. This is when you get a typical bureaucrat like him come in and that they go power hungry. So I don't have any love for Gary Gensler.
Either do I. So we were on the same boat there. What else do we have? What's your final words for the day? I do got to get running here in a second.
Yep, I know you do. So let's look at next week. Right now, geopolitics are turbocharging volatility. This oil shock is complicating the interest rate path. Dollar safe haven, though, has been reaffirmed, and watch the upside break of 140.50, setting up a 102. Next week is the super week. It's the Super Bowl of the currency markets because all the central banks, as I mentioned, are meeting. ECB, Bank of England, Bank of Canada, Fed, all probably going to be likely on hold in a hawkish path, talking about oil. But what is that? That is not prudence. It's technocrat risk aversion. They are deers in a headlights and they don't know what to do. So next week, big week on interest rates. I'm holding out that we could see a couple of interest rate declines in a squeaker type move, which would support the market and support the equity upside play.
I love it. I can't add to that except for, folks, we'll see you Monday. BigBeat will be back. We'll be back with our regular lineup. And, Bitcoin looking great at 72,837. Be careful if it approaches 73,574, 74, though. That's where it most likely fades out. Everybody have a fantastic weekend. For me and Mr. Flanagan, have a great day.